Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Also, as we said, because of the impact on Chinese exports to Europe, and their exposure to European bonds, which a lot of people, a lot have, but China, of course, holds a lot of bonds within Europe. A breakup in the monetary union really exacerbates the current credit bubble in China and the bit of slowdown that we've already seen. Again, if China breaks because of this, the currencies you just want to be short and stay short for a while are these guys, again, the commodity currencies. They get crushed in a very, very big way. We could just call these currencies China currencies. Again, Canadian dollar maybe less so because of its locale with the U.S., but in general, the commodity currencies on any spillover negative impact of the euro into China. This is a scenario we had set up for our long-term view that we think the dollar is in a multi-year bull market, and I won't go into all these reasons, but part of the reason is as the dollar increases in value against the euro, it tends to relieve European pressure there. Obviously, the Europeans would love to see the euro fall in value because it takes some pressure off German exports and those types of things in general, so that's been part of our long-term dollar story. Charts here. This is a chart, daily chart, and we've been short pretty much since here and have stayed with this trade consistently. I mean, we were back and forth when it went to 160, back in and filling here and there, getting some money. But we really got short and have not been non-short, maybe in and out, maybe a day or two not short in the short-term account, intermediate term accounts. But in general, we've been short since the mid-140s in the euros, and you can see how nicely it's been channeling down here in kind of a nice Elliott wave pattern. And sometimes we create charts to fit our view, and so maybe that's part of it. But this is the Elliott wave view that we have. Our next target here, maybe we get a bounce in here. We think technically the euro is due for a bounce, but if we get a bounce up in here, our next target is 117.94. After that, we have a target of 106. Ultimately, we think it goes to par and beyond. We don't think it's the end of the world for Europe. In fact, probably beneficial for Europe if they're muddling through and the euro goes to par. This is a look at the euro-US dollar weekly. You can see 160 got crushed right away during the credit crunch, big rebound. Everybody thought the dollar was back in this multi-year bear market again, and then slam when the impact of this credit crunch finally started rolling into the fundamentals that everybody started to see, and all those structural warts of the euro started coming to the surface. Swedish krona, this is Swedish krona, and it's traded in U.S. dollar SEK. So as this rises in value in this chart, it means the krona is weakening against the U.S. dollar. You can see this is a weekly wave chart. We have our 5. We think the krona's in trouble along with the euro here. So we think that's a pretty decent trade set up for people that are looking for other ideas besides just the euro. And Steve has that option available, I think, on the ISE. This is what I wanted to show you. We inverted the euro here. The euro is inverted in a red line. The krona is the black line. You can see how tightly they've impacted. But you can see here how much faster the krona actually weakened in here during the credit crunch. And this was the hit that they took because of the concern of the Swedish banking system when the Baltics and Hungary almost fell off the cliff and the IMF had to come in and save them. So that goes to show you that if we get a contagion here because of the eurozone, we think the Swedish krona actually is going to move and weaken even faster than the euro on contagion. Again, assuming the contagion isn't the breakdown of the euro type of contagion, meaning it's just going away. Obviously, that'll be the leader. And these are some of what we offer. Steve says our free service, currency you can sign up. And these are our other services that we offer, our paid services, and you can just write us at info@Black Swan Trading. We'll happy to give you information on any of those. And that's it, Steve. I'm going to take some questions.
Yeah, absolutely, Jack. Awesome, as always. There's lots of questions, so we'll start with, and I think you actually handled this one, but I promised. I met Larry in Atlanta at an options education day, and Larry said he couldn't wait for your webinar, so I said I would definitely bring up his question, and his question is, how low, Jack? I think you said par, parity, whatever. How long will it take against the euro?
I don't know. I mean, we could go. I just pure guessing. I mean, if we can look at this chart back here, we can see it's gone from 160 to 120. So it's 40 cents off of it. What's that time frame right there? It's less than a year, 9 months.
Right.
So it's lost 40 cents in 9 months. It's at 120 here. So, who knows? Maybe the end of the year, you're close to the end of the year. We're looking at par. That would not be out of the range in terms of the path that it's followed so far. But it's one of those situations. If they start to muddle through and it gets a bounce, and something good happens, and something good can happen. I don't discount that. It's going to back and fill a bit. But we could wake up one day and somebody says, we're leaving. We are leaving the zone, and then it does something like this. You know what I mean? It's very hard to call.
Denji has a question, and I guess he's caught this at either Currency Currents or one of your other, whether you're writing or another live presentation, but he says that in the past you've actually talked about 7 and 8 year cycles. Do you still believe in that as far as the dollar strength and the euro's weakness? I mean, obviously you just said that it might happen in the next 6 months, but just expand on that 7 to 8 year cycle that at least Denji says that you've talked about in the past.
Yeah, that's right. That's great memory. If we look at the currency markets as we know it, measured by the U.S. dollar index, it started around 1972, I guess, when summer of 71, and a dirty float and started floating in 72, the currencies. The U.S. dollar has gone through, right away a bear market. Then we had the bull market when Volcker came in and squeezed interest rates. Then we had another bear market. Then we had a bull market during the 1990s run in the NASDAQ and the stock market. And then this latest bear market in the U.S. dollar. And if you look at this euro-U.S. dollar chart, which would be the inverse of the dollar index, you could say it started around 2001, 2002, and the bear markets have been about 7 years, the last 3 bear markets in the U.S. dollar, so for some reason. And this one pretty much fit that 7-year pattern in terms of cycle pattern on the button. Again, that's not a big sample size, obviously, but it's something that we had talked about. And we had talked about the euro topping because of, 1, the 7-year cycle, 2, we just thought it was overvalued, 3, we saw for a lot of reasons, and it seemed to play out. So if you'd say that we're back into some type of 7 to 10 year, and actually the bull markets have been longer than the average of 7 years, if we're in some type of multi-year bull market in the U.S. dollar, which we think we are, we're just in the early stages, and that's one of the points that we've been making.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.